Yes, students, now we will revise the topic of TDS, TCS, and advanced tax. So let us divide this chapter into three parts. First, we will focus on TDS and then TCS, followed by advanced tax, guys. But before we get into these topics, guys, let us just try to recall Section 4 of Income Tax Act, which is a general charging section, which specifies the total income of a person earned during the previous year is chargeable to tax in the assessment year. So, as per this statement, the income earned by a person in the previous year should be taxable in the assessment year. Yes. But in reality, sir, is it always true? No. How is that? We have already seen few exceptions for this general rule in chapter 1 itself, guys. That is, the income earned in the previous year will be taxable in the previous year itself in few cases, like when a person is living India permanently or a shipping business of a non-resident company. Yes. So we have seen that. But in addition to this, even the normal people will end up paying tax in the previous year itself. And tax, what I'm talking about is income tax. Sir, how is it possible, sir? Guys, the government will collect income tax from the people directly or indirectly in one or the other way. And which are those way is what we are learning in this chapter. Let me try to explain this with an example. Just focus here. Guys, during the previous year, whatever income I will earn, for the payer who is supposed to pay me, I am called as payee, and whoever is paying me, they are called payer. So they are supposed to deduct a part of the income what they are paying to me and deposit it to the government, and that is called TDS. And same way, when seller is selling some specified goods or services, in addition to the sale consideration, he is supposed to collect TCS at various rates. And whatever TCS he will collect or TDS a payer will deduct, they will remit it to the government. So it is as if a person who has paid it is like payee, or in case of TCS, it is the buyer, guys. Clear? So government would have collected from me a tax that is not the entire tax I have to pay, maybe a part of it in the form of TDS or TCS. That is indirectly, because I myself would have not paid it, but someone else, whoever is paying to me, they would have deducted and remitted to the government, or else whoever is collecting the money from me, I am a buyer. So seller is collecting money from me. In addition to the sale consideration, he will also collect TCS and remit it to the government. So it is as if I have paid it to the government. Yes, sir. Then coming to the advance tax, in the previous year, if advance tax provisions is applicable to the assessee, he himself has to calculate the advance tax and pay it in 4 installments. So these are the payments which are made in the previous year itself, for which the assessee will get credit in the assessment year from the total tax liability. So in the assessment year, what assessee is supposed to do is he has to compute his actual total income considering all the exemptions, deductions, everything. Then on that, apply whatever is the tax rate applicable, compute the total tax liability. From that, whatever TDS has been deducted and remitted to the government, or TCS collected and remitted to the government, or else the advance tax paid by the assessee himself, claim a credit. Claim a credit means you deduct it from the total tax liability, and remaining, if any, has to be paid by the assessee as self-assessment tax before filing the income tax returns. So let us understand with the numerical, guys. You assume in the previous year, the various payers has deducted TDS under different sections, total coming to 1 lakh, and TCS collected and remitted to the government is 20,000, and assessee himself has paid an advance tax of 1,50,000, guys. Okay. So all this amount is paid by the assessee directly or indirectly in the previous year itself. And all these are a part of income tax only. Yes, sir. Then in the assessment year, the assessee will do the actual calculation. The total income is coming to assume 20 lakh, and the total tax liability on that is 4 lakh. I'm just taking a random figure, guys. It is not a computed figure. Okay. So should he pay the 4 lakh now to the government? No, no, no. Whatever amount he has already paid in the form of TDS, TCS, or advance tax, now he will get a credit of it. So deduct it from the total tax liability. Remaining amount is payable by the assessee, guys. And this figure we call it as self-assessment tax. And assessee has to pay this tax and then file the income tax returns within the due date given in section 139 subsection 1. Sir, what if by chance if this amount is already paid, which is higher? In that case, the excess amount, whatever the assessee has paid, no, he can claim a refund. He can claim a refund. So you can see already in the previous year, TDS deposited is 2 lakh, TCS collected and deposited is 20,000, and advance tax is 2 lakh 50. Whereas the total tax liability of the assessee is coming to only 4 lakh. So if I reduce all these three credits, then we are getting a negative figure of 70,000. That means assessee has already paid excess tax, either directly or indirectly during the previous year. So you can claim a refund of this by filing the returns, guys. Either this or this will happen, not both for the same year, guys. Got it? Yes, sir. So whatever topics we are learning in this chapter is a payment made by the assessee either directly or indirectly in the previous year itself, guys. Because even the government has to run throughout the year, right? Yes. So this concept, that is TDS, TCS and advance tax, is based on the doctrine of pay as you earn. Pay as you earn. They gave a dialogue in section 4 telling income earned in a previous year is chargeable to tax in assessment year. But in reality, it is not 100% followed, guys. Okay, now let us come back. Now let us come back. Now let us focus on TDS concept, guys. That is tax deducted at source. So I will try to explain the concept of TDS through a chart. So please pay attention, guys, because most of the things would be covered here. Okay. Now, payer, whenever he is paying any expenses, he need to check whether whatever he is paying, is it covered under TDS sections? Means, is he supposed to deduct TDS? So there are various sections which will list out various payments made by payer, and if it is above the threshold limit, then the payer has to deduct TDS at the respective rate which is given in the section and deposit it to the government within 7th of next month, guys. Okay, yes. And compliance of TDS is the payer's responsibility. Okay. So whenever payer is paying any expenses to the payee, he has to check whether whatever payments he is making or whatever expenditure he is incurring, is it liable for TDS? If yes, he has to deduct a part of it as TDS and remit it to the government. So let us assume payer is paying 10 lakh, amount of expenses is 10 lakh to the payee, on which TDS is supposed to be deducted at 10% under any section. There are number of sections, we will cover it after this. Okay. So TDS is supposed to be deducted at 10%. So 10% of 10 lakh comes to how much? 1 lakh. So this 1 lakh, whatever payer will deduct, you need to remit it to the government within 7th of next month. For example, if TDS is deducted in June month, it has to be deposited within 7th of July, guys. On or before 7th July. Okay. So what if it is not deposited within 7th July? From 8th July, interest will start. You have to deposit 1 lakh, but along with interest from 8th July. Okay, sir. Fine. So you need to pay remaining 9 lakh to the payee. But for the payee, please listen here. What would be the income means? It is always 10 lakh. Gross figure would be considered. So to compute the total income of the payee, should we take the net figure or gross figure, guys? It is always gross figure. And if in case in the question, if they have given net figure, that is the amount received after TDS or net of TDS, if they have given, please gross it up and take while computing the total income or while computing the income under the respective head. Got it? Sir, how do we calculate? If net amount is given, how do I calculate gross amount? Guys, you use simple formula. What is it? Gross amount is equal to net amount divided by 100% minus TDS rate. TDS percentage. And you should know what is the TDS percentage under each section. Only then you will be able to calculate it. Or else sometimes they will only give the amount received is this much, net of TDS 1500. For example, assume amount received is 8500, net of TDS 1500. So what is the gross figure? 10,000. So in the income calculation, we need to take how much? 10,000. Whereas 1500, we will deduct it from total tax liability, which I showed before, guys. So for whatever TDS has been deducted, assessee will get a credit of it. That is payee as per my example. Got it? Yes. So even in this example, as per this example, payee has to consider how much as an income, guys? 10 lakh. He has earned 10 lakh. We should not consider what is received. We need to take what is earned. Okay. Sir, what about this 1 lakh, sir? It has been deducted and remitted to the government. Papa, payee didn't receive it. Yes, he will get it as a credit from total tax liability. Hope you understood. I repeat, for payee while computing the income under the respective head, you need to consider the gross amount, that is before TDS. Whereas whatever TDS has been deducted and remitted to the government will be reduced from the total tax liability of the payee, guys, as a credit. Okay. Then fine. So the payer deducted 1 lakh and remitted to the government within 7th of next month. Is there any other responsibility of the payer? Yes. He should also file TDS quarterly returns in form 24Q, 26Q, and 27Q. What are these form numbers? I will cover it later. But any of this he has to file. Or if he is making number of payments throughout the year, then he may end up filing all three. For each of the form, there is a particular expenses covered. We will see that later, guys. Okay. So what all should the payer do is first deduct TDS if it is applicable and then remit it to the government and file the TDS returns quarterly with the government and also issue a certificate of proof to the payee in form 16, 16AA or 16A. This acts as a proof to the payee because payee is worried, if the payer deducted 1 lakh from the income of a payee and deposited to the government. Now payee is bothered about what did you do with my 1 lakh. So the payer has to issue a certificate of proof to the payee in form 16, 16AA and 16A telling whatever amount of TDS I have deducted under which section, when did I deposit it to the government? And the payee can claim a credit of it. It just acts as a proof. Actually now, whatever TDS has been deducted, no, it will automatically reflect on the income tax portal, guys. But still, sir, even now the payers will issue a form 16, 16AA or 16A in order to give the clarity to the payee, guys. If not, they would be worried. If not, even if the payee just log in into the his income tax profile on the income tax portal, he will get to know what all TDS has been deducted on his income, by whom, and when it is deposited to the government. He can capture that data, guys. It is automatically actually already captured. He can view it. Okay. There is something called as EAS and TAS also. You guys would have learned even this in the auditing paper. Yes. So assessee can get complete information on income tax portal about what all income he has earned, on which TDS has been deducted by how much and by whom it is deducted, and is it deposited to the government. All the details will be auto captured there, guys. Okay. With respect to income as well as tax, both. Fine. Now, sir, why should payer do all this, sir? He is already engaged in business or profession. He is busy in his life. Why is government or income tax department asking the payer to do so much? Guys, if the payer doesn't comply with the provisions of TDS, then he will be called as assessee in default as per section 2 clause 7. Hope you remember. Assessee includes assessee in default, correct, who is deemed to be an assessee by default. Okay. So if payer doesn't comply with the TDS provision, he is causing loss of revenue to the government. So he will be treated as assessee in default. In that case, he has to pay the TDS amount in default out of his own pocket, along with interest, late fee, and penalty. And if the amount is huge, he will also get the imprisonment, free boarding and lodging. Okay, sir. Then the payer cannot claim 10 lakh as an expenses. As per section 40A1 and 40A1A, which we have covered under the PGBP head, if TDS is not deducted or else deducted but not remitted to the government, then the expenses will not be allowed to the payer. As per section 40A1, where the payment is made outside India or for a foreign company or to a non-resident, if TDS is not deducted or deducted but not remitted, 100% of the expenses will be disallowed. Whereas as per section 40A1A, if the payment is made to a resident payee and if TDS is not deducted or deducted but not remitted to the government, and not remitted to the government within what time? Not the TDS due date. In section 40A1 and 1A, they are giving extended time till when? The due date of filing the income tax return. So if the payment is made to a resident without TDS or TDS is deducted but not remitted to the government, 30% of the expenditure will be disallowed, guys. Hope you guys remember it. I had explained this concept when I was covering section 40A1 and 1A under the head PGBP. Along with when pay is the resident or if pay is a foreign company or outside India, non-resident, all those things we have discussed in detail, guys. Got it? But one thing, please be careful. Whatever time limit given under section 40A1 and 1A is the due date of filing the returns. Whereas the due date to deposit TDS is 7th of next month. there is one more actually section with respect to PGBP head 48.3, which covers the salary paid outside India or to a non-resident. There actually they have referred to the due date of TDS. If salary paid to a non-resident or outside India on which TDS is not deducted or is deducted but not remitted within the due date of TDS, if it is late even by 1 day, it is permanently disallowed. Where is it given, sir? Section 48.3. But this covers only salary payment. Got it? Yes, sir. Chalo guys, fine. So we are done with this concept. Next, we will move. This is just a basic concept or overview about a TDS, guys. Next, we will see, sir, when TDS has to be deducted. Okay, guys, I have TDS covered under various sections. But before I get into it, I just want to explain two things. Who is the payer for few sections and when TDS has to be deducted. Now let us learn when TDS has to be deducted. Assuming now the payer is making a payment, is supposed to deduct TDS. On what day should he deduct TDS? Guys, if there is no clarity on when TDS has to be deducted, then the payer will take his own time and deduct whenever he wants. So government doesn't want to take that risk. So that is why they are giving a clarity under each section when the payer is supposed to deduct TDS. And if there is any delay, obviously they will charge interest for that delay. Okay. Guys, there are two set here. For few sections, the date of deducting TDS is date of payment, whereas for few more sections, it is date of credit to the account of payee or the date of payment, whichever is earlier. So we'll go one by one. First, date of payment. So TDS has to be deducted by the payer on the date of payment for the following sections. So which are those sections? I will just read it out. For section 192, 192A, 194B, BA, BB, DA, LA, N, P and R. And guys, each of these sections we will discuss later. Don't worry. Okay. So for these sections, if the payer is supposed to deduct TDS under any of this section, then he has to deduct TDS on what day, people? Date of payment. And you know, in reality, there are two types of transactions, that is cash transaction or credit transaction. Cash transaction means, sir, it is paid immediately. Whereas credit transaction means, sir, some time is given for the payer to make the payment. Okay. And all this, whatever we are discussing, I will explain with an example, guys. But let us assume all this in the books of payer because he is the one who is supposed to deduct TDS. Okay. Now, it is a cash transaction. Let us assume the payment is made immediately on 15th July. What is the entry in the books of accounts of the payer, guys? Let me assume myself as payer and you are a payee. You are a payer. Ready to receive the amount from me? Yes, sir. Okay. So I am the payer. In my books, what is the entry I will pass? Expenses to bank. Expenses means that particular expense. It will have a name. We will use it. But I am just using a common name here or general name, expenses. Okay. Expenses to bank, I will pass an entry on 15th July. So on what day I am supposed to deduct TDS? On 15th July. And remit it to the government on or before 7th August. 7th of August. Okay. Sir, what if it's a credit transaction? Then I will pass two entries in my books. Okay. So I am not paying you immediately. Till I pay you, you are like a liability in my books? Yes. So expenses to pay or creditor, that is you. Okay. So till I pay you, you are like a liability in my books. Okay. On 10th August, I pass this entry. Okay. Then I am making the payment, assume on 5th September. Then the entry would be, now liability will get cancelled, pay or creditor to bank. I'm making the payment. So when am I supposed to deduct TDS? On the date of payment. So which is that? 5th September. So I need to deduct TDS on 5th September and remit it to the government on or before 7th October. That is 7th of next month. Hope you understood. So irrespective of on what day the payment, expense entry is passed, we need to consider the date of payment for the following sections. We should always take date of payment. Okay, sir. Whereas for this sections, guys, for this sections, we need to take the date of credit to the account of payee in the books of accounts of the payer or the date of payment, whichever is earlier. And that is the date on which TDS has to be deducted by the payer. And this provision is applicable for which all sections I have given you. I will just read it out. Section 193, 194, 194A, C, D, H, J, G, H, IA, IB, J, K, M, Q, and T, guys. For all these sections, the TDS has to be deducted by the payer on the date of credit to the account of the payee or the date of payment, whichever is earlier. Let me explain with an example. Assume, guys, it is a cash transaction, so payment is made immediately. So there is no question of credit transaction here. Okay, sir. So TDS has to be deducted on what day? 15th July only, and remitted to the government on or before 7th August, guys. Okay, sir. Then coming to this part is important. So assume it is a credit transaction. So expenses is booked in the books of the payer on 10th August. Expenses to pay or creditor. So on what day the account of the pay is credited in the books of accounts of the payer, guys? 10th August. And on what day payment is made? 5th September. So whichever is earlier, 10th August or 5th September, whichever is earlier, guys, 10th August. So TDS has to be deducted by the payer on 10th August and remitted to the government on or before 7th September. And here actually the date of payment is 5th September. So you can deduct even on that day and remit it on 7th September. Clear? But the date of on which he is supposed to deduct TDS is this date. But he can remit it to the government on or before 7th September, right? Yes. And payment date is coming before that. Now you might ask me, sir, what if it is 15th September? In that case, still payer has not made the payment. So in that case, payer can deposit the TDS amount from his pocket. Later, when he is paying the amount to the payee, he can deduct and he himself can keep it. He himself can keep it. Means if there is too much time gap between the date of credit and date of payment, the liability to deduct TDS will already arise for the payer. In such case, deposit the TDS out of your own pocket. Later, when you are making the payment to the payee, deduct the TDS and you can keep it. You can keep it because you already deposited the TDS to the government out of your own pocket. That is what these provisions are telling us. Okay. So this is with respect to when TDS has to be deducted. So I have tried to cover it in one single table, guys. Okay. So please try to remember for which sections what date is applicable. Okay. Next, for few sections, guys, payer will not include the individual or HUF who was not subject to tax audit last year. Sir, which are those sections? I have given the list here. Section 194A, C, H, I, IB, J and R. So for this sections, payer will include any person but other than the individual or HUF who was not subject to tax audit last year. So that means if an individual or HUF is subject to tax audit last year, are they called as payer in the current year? Yes. So are they supposed to deduct TDS under these respective sections? Yes. Sir, what if payer is other people like company, partnership firm, UOP, BOI and all? They are always covered as payer, guys. They are always covered as payer, irrespective of whether tax audit is applicable for them in the last year or not. Got it? Yes, sir. Fine, guys. Now we will see the list of expenses on which TDS is applicable. Number of sections are here and I will try to explain as much as possible, guys. And I have tried to simplify in the revision material as much as possible. I have simplified here. And obviously, if you want to learn in detail, you have to refer to the provision book or regular book. But whatever is important, I have tried to highlight here. Clear? Yes. And here there are few amendments in TDS topic, especially with respect to threshold limits. For few sections, the threshold limit has been increased, guys. So wherever there is an amendment, I would have given it in italics. You can observe here. Just give little extra importance for it. It might be tested in the exam. Okay, let us begin with the list. Section 192 will ask employer when he is paying the salary to the employee, he is supposed to deduct TDS on the income of an employee. So employer will ask employee to submit all the details. Anyway, employer will already know what is the salary income which an employee is earning. But if he is having any other income like house property, interest and all, the employee can submit the details to the employer along with any deductions he is eligible for. Accordingly, the employer will calculate the total income of an employee and calculate the tax liability. Then calculate the average rate of tax which an employee is supposed to pay. That is the total tax liability divided by the total income of an employee into 100. That will give us average rate of tax. So every month on the salary income, you would be deducting that much TDS. And there is no fixed rate of TDS in section 192, guys. Clear? So in simple, whatever tax the employee is supposed to pay, it will be deducted by the employer as TDS under section 192. But if employee's salary is less than basic exemption limit of like 4 lakh under default regime, or under optional regime, it is like 2 lakh 50, 3 lakh or 5 lakh depending upon the age. I've just given 3 lakh here, but it can also be 2 lakh 50 as well as 5 lakh, guys. Then the employer will not deduct TDS. Even actually, if employee is eligible for rebate under section 87A, where the employee's tax liability is zero after claiming rebate, the employer will not deduct TDS, guys. Okay. And when TDS has to be deducted by employer is at the time of payment. Okay. So when TDS has to be deducted, I have already discussed in detail, guys, for all the sections in this table. Got it? Yes. Sure. Next. Section 192A will tell when employee is withdrawing the money from the provident fund, if it is taxable in the hands of employee, then the payer has to deduct TDS at 10% if the amount is more than or equal to 50,000. More than or equal to 50,000. When, sir? At the time of payment. And when the amount is withdrawn from the PF fund, if the amount is exempt in the hands of employee, then the payer need not deduct TDS. So TDS has to be deducted not only under this section, anywhere, guys. Only if the income is taxable in the hands of payee, the payer has to deduct TDS. Same way here, when the amount is withdrawn from the PF, if it is taxable to the employee, only then the TDS has to be deducted. Assume the amount is withdrawn by an employee from recognized provident fund after 5 years of continuous service. Is it taxable for him? No. When it is exempt in the hands of employee, then the payer need not deduct TDS. And here, please be careful, the payer will not be the employer. It will be a fund. Okay? Yes. Or it will be a person with whom the PF account is opened. Next, section 193 talks about TDS on interest on securities like bonds, debentures and all. If the interest is more than 10,000 in a financial year, amendment, more than 10,000 in a financial year, then TDS has to be deducted at 10% at the time of credit or at the time of payment, whichever is earlier. Okay. And guys, please be careful. See, TDS has to be deducted only if the amount paid is more than the threshold limit, which is given in this column. And wherever the threshold limit is given in most of the section, it is per financial year, guys. There are few exceptions when I go to that particular section, I will explain it. But until and unless I tell specifically, it means whatever threshold limit is given in that section is for a financial year. And if the amount paid is more than the threshold limit, assume the threshold limit is 10,000, amount paid is 12,000. Should TDS be deducted on 12,000 or only 2,000? Entire 12,000, guys. If the payment made is more than threshold limit, then on the entire amount TDS has to be deducted. Got it? For most of the section, this is a provision. But here and there are few exceptions where TDS has to be deducted only on the excess amount. But when I go to that particular section, I will specifically mention it. But until then, wherever we see threshold limits, you should know that if the amount paid is more than the threshold limit, on the entire amount, TDS has to be deducted. So in my example, on entire 12,000, TDS has to be deducted, guys. Got it? Yes, sir. Next, section 194, TDS on dividend. If the shareholder is an individual shareholder like you and me, then the threshold limit is more than 10,000. If you are earning a dividend from a company less than 10,000 or equal to 10,000, then no TDS. Whereas if the shareholder is any other person, then there is no threshold limit at all. For example, assume a partnership firm is holding the shares in a company or one company is holding the shares in another company. Then what is the threshold limit applicable? 0. Even if they are earning 10 rupees dividend, the payer would have deducted the TDS, guys. Clear? And please be careful, guys. This 10,000 is a limit for each company. Now assume I have invested in the shares of 10 company and all these 10 companies are just paying me a dividend of 2,000, 5,000, 6,000. That is within 10,000. Should they deduct TDS? No. For each company, the limit is 10,000. Okay. So TDS has to be deducted at 10% at the time of credit or payment, whichever is earlier. Okay. Then 194A, interest other than interest on securities. So interest on securities is already covered under section 193. Yes. Then Interest other than interest on securities, like interest on deposits, loan, capital, like that, guys. First, we need to see who is the payer. If the payer is a bank, cooperative bank, or cooperative society engaged in banking business, or post office, if the payer is any of these people, check who is the payee. If the payee is the resident senior citizen, then the threshold limit is 1 lakh, guys. If it is any other person, then it is 50,000. I repeat, if the payer is a bank, cooperative bank, or post office, check who is the payee. If the payee is the resident senior citizen, then the threshold limit is more than 1 lakh. If it's up to 1 lakh, no TDS. Up to 1 lakh means less than or equal to 1 lakh. Okay. Or for any other person, the threshold limit is more than 50,000. More than 50,000, guys. Got it? If by chance, if the question is silent about the payee, always go with 50,000. Okay. Then, in any other case, means the payer is not a bank, cooperative society, or post office, sir. In that case, the threshold limit is more than 10,000 in a financial year, guys. Is that clear? For any other payers? And TDS has to be deducted at what rate? 10% at the time of credit or payment, whichever is earlier. But there is one exception telling, if the interest is paid to these people, don't deduct TDS. If they are paying, if payer is a bank, cooperative bank, or post office, they will deduct. But assume I am paying, I have taken a loan from bank, I am paying interest to them. Should I deduct TDS? No, sorry. They are asking, don't deduct TDS. Okay. Fine, guys. So this three sections, and TDS is at 10%. This three sections, it is like income on investments, where the TDS rate is same, you can see. But please be careful. You should know the section, when exactly which section has to be applied, and what are the threshold limits. Threshold limits are different, guys. So threshold limits all are amended. Please be careful. All these are amended figures. Increased limit are put now for thresholds. Yes, sir. Then coming to casual income. So if a person is earning a casual income, it is taxable at 30% as per section 115 BB as well as BBJ under the head income from other sources. Yes. And against casual income, you cannot claim any expenses, you cannot set off any loss, you cannot claim any deductions under chapter 6A. Yes, sir. Now, for the payer, they are telling, please deduct 30% TDS. Because government also know that the person who is earning it or who is winning it will not keep it for a longer period. So they are asking the payer itself to deduct whatever is the tax the payee is supposed to pay on casual income, deduct entire as TDS. Entire amount of tax, deduct it as TDS, that is 30%. Okay, this is the highest rate of TDS, guys. Okay, let us see. Section 194B will tell casual income other than horse race. Okay, if it is more than 10,000 for a single transaction, then TDS has to be deducted at 30% at the time of payment. Sir, what if it is winning from horse race? Then TDS is covered under section 194BB, guys. Same provision but different section, that's all. Oh. More than 10,000 for a single transaction, 30% TDS has to be deducted at the time of payment. And the single transaction is an amendment now. What are they trying to communicate here is, guys, assume I have earned or I have won from horse race 3 times in a year. And each time it is 5,000. Should the payer deduct TDS? No. Assume each time I have won 15,000 each. So each time it is more than 10,000, yes, TDS has to be deducted. So for each transaction, there is a threshold limit of 10,000 for each winnings, in fact. Okay, yes, sir. Then 194BA will talk about winning from online games. Even for this, as per section 115 BBJ, the actual tax rate is 30%. No? Same thing is deducted as TDS here, as per section 194 BA. Okay. So winnings from online games on the net winnings in a person's user's account, there is no threshold limit here. And when TDS has to be deducted is at the end of the financial year or in between the financial year, if there is any withdrawal from the account, then at the time of withdrawal. Assume I have won from an online game 1 lakh rupees. I am withdrawing it from my account. At the time of withdrawal, it will be deducted at 30%. No, sir, I have kept the winnings in my account only. Then the TDS would be deducted at the end of the financial year, that is in March month. Got it, guys? Yes. And please be careful, for this there is no threshold limit. For all three cases, TDS rate is same, but the threshold limits are different, guys. Please be careful. And section 194B, BA or BB talks about TDS on casual income. And tax rates on casual income is given in section 115 BB and BBJ. So this B has some connection to casual income, guys. It is more about betting and all, no? Yes. So try to remember like that. 115 BB, BBJ, read with these three sections. So you can write here, read with section 115 BB, capital BB, 115 BB and 115 BBJ, which talks about tax rates on casual income. Fine, sir. Let us move on. So 194C, C is for contract payment. Guys, I repeat, please try to remember the section, threshold limit, rate of TDS, everything. We covered 192 and 192A is with respect to like salary income, and 192 is actually salary income, whereas 192A is with respect to provident fund. Okay. 193, 194 and 194A is with respect to income on investments in the form of interest or dividend. Okay. TDS rates are different. Sorry, TDS rate is same, whereas threshold limits are different. Please be careful with it. Okay. Then B, BA and BB is all about betting or winnings or casual income. Okay. Then 194C, contract payment. So if the contract payment is made single time in a year, the threshold limit is more than 30,000 for single payment. Or if number of payments or multiple payments is made, then there is a aggregate threshold limit of more than 1 lakh. So assume I am making 25,000 5 times in a year for you, contract payment. So 25,000 into 5, it is more than 1 lakh. Should I deduct TDS under section 194C? Yes. Individual payments might be less than 30,000. But in aggregate, in a year, is it more than 1 lakh? Yes. Sir, what if assume I am paying 50,000 5 times. Every time I pay you, I am paying you 50,000. And totally in a year, I have made 5 payments. In that case, each time I am making a payment, single payment itself is more than 30,000. Should I deduct TDS? Yes. And if aggregate payment is more than 1 lakh, on the total amount paid, TDS has to be deducted, guys. Sir, at what rate? 1% if the pay is an individual or HUF, or if pay is an other person, then it is 2%. At the time of credit or at the time of payment, whichever is earlier, guys. Okay. Then 194D is TDS on insurance commission, which is paid by insurance company to an insurance agent. If the commission is more than 20,000 in a financial year, amendment, okay, threshold limit has been amended. Yes. How much TDS has to be deducted? If the payee, that is agent, if they are domestic company, then 10%. Or if the agent is assume individual or any other person other than domestic company, then TDS has to be deducted at 2% at the time of credit or at the time of payment, whichever is earlier, guys. Okay. Then even actually insurance has connection with the D, which I will explain. Let me finish this. 194 DA. Any sum under a life insurance policy, if it is more than or equal to 1 lakh in a financial year, that is the policy amount or sum assured, which we call it as 2% TDS has to be deducted at the time of payment. But when policy matures, if the amount is exempt in the hands of the receiver as per section 1010D, which we covered in income from other sources, yes. So when the policy matures, if it is exempt in the hands of receiver, then TDS need not be deducted by the payer. Here, who is the payer means the insurance company, and the payee will be either insured if he is alive, or if he is gone forever, then the nominee, guys. And obviously, if it is received by nominee on the death of insured, it is always exempt. There is no question of TDS here. So obviously, insured might be alive, and during the term of the policy, at least in 1 year, you would have paid more than 10% or 15% or 20% of the sum assured, or more than 5 lakh premium if the policy is taken on or after 1st April 2023. So in such cases, exemption is not available under section 1010D, right? Yes. So when policy matures, if it is taxable in the hands of insured when is alive, then the payer, that is the insurance company, has to deduct TDS under section 194 DA at 2%. At 2%. Okay, sir. Fine. So this insurance, you can see, a person will take insurance policy when he's scared of death. Correct, guys? Yes. So on insurance commission, TDS has to be deducted under section 194D. Yes. And on life insurance policy amount which matures, which we call it as sum assured or policy amount, if it is taxable in the hands of recipient, that is the insured, then TDS has to be deducted under section 194DA. And this is connected to 1010D. So all this insurance related are connected somewhere to D, guys. Only when exemption under section 1010D is not available, then the payer has to deduct TDS as per section 194DA. That too only if the policy amount is more than or equal to 1 lakh, guys. Okay, let us move forward. 194G. If there is any commission on the sale of lottery ticket which is paid by the organizer to the agent, then if the commission is more than 20,000 in a financial year, then TDS has to be deducted at 2% at the time of credit or payment, whichever is earlier. Then any other commission or brokerage is covered here. If it is an insurance commission covered under section 194D, if it is commission on the sale of lottery ticket, then G, that is lottery ticket and all is gambling. Yes, so 194G. Any other commission or brokerage is covered under section 194H, guys. And if commission or brokerage, just they are mentioned, assume in the question, commission or brokerage, they didn't tell whether it is insurance commission or commission on sale of lottery ticket, please apply 194H. If they've just used the word commission or brokerage. Okay. And if commission or brokerage is more than 20,000 in a financial year, then 2% TDS has to be deducted at the time of credit or payment, whichever is earlier, guys. Okay, sir. Fine. Then one more thing. Sir, how to remember this? Guys, commission is covered in 3 sections. D is for insurance commission. So normally when we are scared of death, we will take the insurance policy. Yes. And agent will create that scary. You guys would have seen in your family, if any person is an insurance agent, they would have taken care of you and your family or your parents so much. They would have told, especially for your parents, sir, first to take policy. What if by chance, if anything happens, your family should be secured, no? So they will care you so much. Sir, why are they doing so much trauma is because if you take policy under them, whatever premium you or your parents will pay on that policy, they will get a commission on it. Okay, yes, fine. Then coming to 194G, see, this is more of gambling, lottery ticket and all. So commission on sale of lottery ticket is covered under 194G. Any other commission or brokerage, yes, guys. And easy to remember, guys. See, there is a transaction between two parties, but they didn't know each other. So in between, there is a person who is called broker, correct? Who is arranging a transaction between these two individuals, and this broker will earn what? Commission or brokerage. So remember like that. So H. I repeat, there are two individuals who want to enter into a transaction, but they don't know each other. So in between them, who is creating a bridge? The broker. The broker for whom the brokerage or commission has to be paid. So 194H, guys. Okay. 194I also, there is an amendment in threshold limit, which is very important. So if any rent is paid by a tenant to the owner or landlord, TDS has to be deducted if the rent paid per month is more than 50,000 per month. Please be careful. Previously it was per annum, some threshold limit was there, but now they have made it per month, more than 50,000 per month. Okay. On the rental income, whatever the tenant is paying to the owner, TDS has to be deducted. Okay. At what rate? For plant and machinery or equipment, it is 2%. For land and building or furniture or fixtures, it is 10%. When TDS has to be deducted? At the time of credit or payment, whichever is earlier, every month, monthly. TDS is monthly year. Okay. Then there is one more section with respect to rent. I will cover that. Payment of rent by an individual or HUF who is not covered under section 44 AB. Guys, here the payer is not the individual or HUF who was not subject to tax audit last year. They exclude them. I already explained you. Hope you guys remember. You can see. Yeah, here I had given. See, for section 194I, payer will not include individual or HUF who was not subject to tax audit last year. So whoever is not included in section 194I, no, so they are trying to cover them here. They are trying to cover them here. So what is it? We will see. Just a minute. Yeah, IB. I am reading IB. Payment of rent by an individual or HUF who was not subject to tax audit last year because they are not covered here. Okay. Yes. Then if they are paying rent of 50,000 or more than 50,000 per month or part of the month, then they have to deduct TDS at 2%. But when? This is important. Last month of the previous year or last month of the tenancy, whichever is earlier. Whichever is earlier. Not every month. It is only once in a year. Only once in a year. So please be careful. Sir, which section should I check first? First check 194I as a tenant. If you are not covered here, then only go and check 194IB. Okay. 194I will not cover the payer who is an individual or HF who was not subject to tax audit last year. And for them, the new section, that is 194, it is not new section for the year, it was added long back, but initially only I was there, later they added IB. So in IB they included individual or HF who is not covered in IE, guys. So which section should you check first is this one. If payer is not covered here, then you can go and check IB. But there is a difference, guys. Rate anyway is different depending upon the asset year, whereas year is always 2%. But please listen here. I will try to explain. Assume I am a person who is paying a rent of 60,000 per month and I am covered under section 194I. Assume I am an individual who was subject to tax audit last year, or I am a company partnership firm. Irrespective of the audit, I am covered here. I am paying a rent of 60,000 per month. So every month I need to deduct TDS at 2% or 10% depending upon the asset. Every month I need to deduct TDS. Okay. Now let us come to this. Now assume I am an individual who is paying a monthly rent of 60,000, but I was not subject to tax audit last year. So I am supposed to deduct TDS under which section? IB. When should I deduct TDS? Every month? No. Assume I stayed in a rented house throughout the year. So what is the total rent I would have paid? 60,000 into 12. On that, what is the TDS? 2%. So this is the amount of TDS. I repeat, 60,000 into 12 into 2%. So this TDS has to be deducted in the March month rent. Whatever rent I am paying in the March month, no, that is the last month of the previous year. In that month rent, entire TDS for a year has to be deducted. Entire TDS for a year has to be deducted. Now, what if I vacate the property in between the year? Assume I stayed in a rented property for 8 months during the previous year and I am vacating the property. So in that case, in the last month of tenancy, whatever rent I am paying, I need to deduct TDS for the 8 months rent. That is till the date of vacancy. So what is the amount of TDS I should deduct in the 8th month is 60,000 into 8 into 2%. So if a tenant stay in a rented property for the full year, then for the entire year, whatever rent he is paying, he has to deduct TDS in the March month. But in between the year, if he is vacating, then in the last month of the tenancy, he has to deduct TDS on the amount of rent which he has paid from the beginning of the financial year till the month of vacancy, guys, or till the month on which he is vacating the property. Okay, fine. So these two are connected. Somewhere they might test, and I feel somewhere students also might get confused when to apply this or when to apply this. So that is why I've taken time and I have explained it, guys. So please be very careful with it. Okay, and this is an amendment. So be careful. Next, 194I, it is on transfer. Payment on transfer of immobile property other than agriculture land. Transfer means sale. So I need to compare the actual sale value with stamp duty value and take whichever is higher. Okay. And if that figure is more than or equal to 50 lakh, then TDS has to be deducted at 1% of that, whichever is higher. 1% of whichever is higher. Whichever is higher means actual sale value or stamp duty value. Whichever is higher. Okay. When TDS has to be deducted? At the time of credit or payment, whichever is earlier. But if the asset sold is an agriculture land, either in urban area or rural area, no TDS. No TDS. Okay, sir. 194 IA we saw. There is one thing connected to IA, that is LA. Let me teach that. Compensation on acquisition of certain immobile property. Guys, please be careful. Yeah. IA covers when I myself sell the property. Okay, immobile property. Immobile property. Easy to remember. Immobile property. Yes. And please be careful. I and IB covers rent, whereas IA covers sale of immobile property. Okay, so easy to remember. IA means sale of immobile property. Okay, sir. And what is covered in 194 LA is compulsory acquisition of immobile property. So normally it will be done by a government authority. Yes, let us assume that my property is compulsorily acquired by local authority, LA. Local authority. So where is it covered? 194 LA. Okay. So compensation on acquisition of certain immobile property. Okay. If the compensation is more than 5 lakh in a financial year, TDS has to be deducted at 10% at the time of payment of compensation. Yes. So you can see in case of compulsory acquisition of land or building or both other than agriculture land. And here also exception is agriculture land in any area, either urban or rural area, no TDS on it. And you should know there is a difference between 194 LA and IA, guys. IA is when I myself sold my property, that is immobile property. Whereas LA is, sir, government authority or anyone is compulsorily acquiring my property, sir, which is land or building. Got it? Actually, as per section 2, clause 47, for capital gain said, both are transfer. But here, for TDS purpose, it is covered under two different sections, guys. So please be careful. If it is a compulsory acquisition, apply section 194 LA, or else if it is a voluntary sale by assessee himself, then IA, guys. Okay. Yes. Then IB we already covered. Let us move to J, where our payments are covered. Fees for professional or technical services, royalty, non-compete fee, director remuneration. So if the payment is more than 50,000, again an amendment. In a financial year, for each category of income, for each category, the threshold limit is more than 50,000. But there is no limit applicable for director remuneration. Okay, let me try to explain. For each category, they told more than 50,000. Assume, guys, I am paying a professional fee of 30,000 and technical fee of 30,000. Should I deduct TDS? No, because each of them is less than 50,000. Now, let us assume I am paying to you professional fee of 60,000 and technical fee of 60,000. Should I deduct TDS? Yes, on both. One more example. Assume I am paying you a professional fee of 30,000, technical fee of 60,000. I should deduct TDS only on technical fee, which is more than 50,000. Got it? Yes. Whereas director remuneration. So if sitting fee or director fee is paid, any amount TDS has to be deducted. There is no threshold limit. Sir, only 5,000 is paid, deduct TDS. Sir, 50,000 is paid, deduct TDS. Sir, 50 lakh is paid, deduct TDS, Baba, deduct TDS. Okay. Next. And please be careful, guys. If this director is also an employee of a company, whatever salary is paid by a company, on that TDS would be deducted as per section 192. And in GST, it is covered in schedule 3, no GST on salary component. Whereas whatever director fee or sitting fee is paid by a company to a director, any director, whether old-time director or part-time director, doesn't matter. TDS has to be deducted under section 194J in income tax. Whereas under GST, this transaction is taxable under RCM. The supplier is actually a director, whereas the recipient is a company. So, as per GST provision, the company being a recipient is supposed to pay tax on this transaction, that is on director fee or sitting fee under RCM, guys. That is reverse charge mechanism. I will also explain this when I am teaching you guys or when we are revising the GST part. Okay, fine. So what is the rate of TDS, sir? 2% pay is engaged if pay is engaged in the business of call center, or if it is a fees for technical services, or royalty in the nature of consideration for sale of film or exhibition of movies. So 2% is the TDS. In any other case, it is 10%. For professional fees or director remuneration and all, it is always 10%. Okay. When TDS has to be deducted at the time of credit or payment, whichever is earlier. Okay, sir. Next, 194K. If it is the income in respect of units of a mutual fund or specified undertaking or a company, more than 10,000 in a financial year, TDS has to be deducted at 10% at the time of credit or payment, whichever is earlier. And this is an amendment. Please be careful. And please be careful, guys. This is when I'm holding the units. Whatever income I am earning, the payer has to deduct TDS if the payment is more than 10,000. What if I have sold the units? Then no TDS. So this is income in respect of units which is earned during the holding period, not at the time of sale, guys. Okay. On sale value, no TDS. Next, LA we already covered. Then M. Okay. M is important, guys. M is actually connected to section 194C, H and J. Under section 194C, contract payment is covered. H, commission or brokerage is covered. J, professional fees or technical fees and all is covered. Yes. But for all these three sections, the payer will not include individual or HUF who was not subject to tax audit last year. and who is not covered under section 194CHJ, they have tried to cover them here. Only if the payment is more than 50 lakh in a year. Let us see. Payment to contractors, commission or brokerage, fee for professional services. If it is more than 50 lakh in a financial year, then TDS has to be deducted at 2% at the time of credit or payment, whichever is earlier. Okay. But here, who is the payer? Who is covered here is whoever is not covered under section 194C, H and J. That means who was not subject to tax audit last year. Sir, if an individual or HUF is subject to tax audit last year, then they would be covered under the respective section, guys. That is 194C or H or J only. Clear? So please first check the applicability of these sections. If a payer is not covered in these sections, only then he might be covered here, provided the payment is more than 50 lakh, huge amount. Okay. Then 194N, this is important. This is a bit different. Please be careful. Listen, guys. See, normally TDS will be deducted by the payer when he is paying the expenses to the payee. And for payee, it is an income earned. You need to consider always the gross income while considering or while calculating the total income. But for TDS deducted, you will get a credit, which we will reduce from total tax liability. But section 194N is a bit different. Assume I have earned an income, I have received it, I have already paid tax on it. Now the amount was lying in my bank account. Now I want to withdraw the money from my bank account. Section 194N is asking the bank that please deduct TDS when I am withdrawing the money. When I am withdrawing the money from my own bank account, they are asking the bank to deduct TDS on my money. Why? Because the government is interested to know what I will do with that money. Because I am withdrawing huge money, huge cash from my bank account. So they're just interested to know what do I do with it. So that is why they're just asking the bank or the payer to deduct a small percentage of the amount which I am withdrawing as TDS cash. So that it will automatically get tracked to the government. Okay. Can they question me with respect to this? Yes. Yes. So if there is a cash withdrawal more than 1 crore in a financial year, or if the person who is withdrawing it is a cooperative society, more than 3 crore threshold limit, then TDS has to be deducted at 2% of the sum exceeding 1 crore or 3 crore. For example, assume I am withdrawing 1.2 crore. In excess of 1 crore, how much is there? Only 20 lakh. On 20 lakh, 2% would be deducted. Very important. For all other section, if the payment is more than threshold limit, we need to deduct TDS on the entire amount, right? Yes. But here it is only on the excess. Only on the excess. I told you, when I go to that particular section, I will stress on it. Yes. Okay. Assume I am a cooperative society who is withdrawing 1.2 crore. No TDS. Assume I am withdrawing 3.5 crore. TDS has to be deducted on only 50 lakh at 2%. Okay. Then in one special case, when is it? The threshold limit is 20 lakh. When is it? More than 20 lakh in a financial year if the recipient, that is payee, has not furnished the return of income for the last 3 continuous assessment years. For last 3 years, the payee has not filed the returns. In that case, the threshold limit is 20 lakh. So if that person is withdrawing money more than 20 lakh, then the TDS has to be deducted at 2% in excess of 20 lakh. Sir, what if the same special person is withdrawing more than 1 crore? Then in excess of 1 crore, whatever is there, 5% TDS has to be deducted. Okay, only for this special person, this provision, guys. Okay, this is for whom? I will repeat. This is for a person who is withdrawing the money who has not filed the returns for the last 3 years. So now the bank has to cross check this also. Okay. So if the payee has not filed the returns for the last 3 continuous years, then he will fall in this category. The threshold limit is 20 lakh. Assume I am covered here and I am withdrawing 50 lakh from my bank account. So in excess of 20 lakh, how much is there? 30 lakh. On 30 lakh, 2% TDS would be deducted. Now what if I am covered here and if I am withdrawing more than 1 crore? Then listen here. Assume I am withdrawing 1.5 crore. 1.5 crore. Okay. Let me answer here. 1.5 crore. So take 1 crore separately. In excess of 20 lakh, how much is there? 80 lakh. So on 80 lakh, 2% TDS, guys. Okay. Remaining is how much? 0.5 crore. That is 50 lakh. On that 5% TDS. In excess of 1 crore, 5%. But more than 20 lakh up to 1 crore, it is 2%. It is like that. So in that case, TDS would be deducted at 2 rates. In excess of 20 lakh up to 1 crore, which comes to 80 lakh, on that 2%. In excess of 1 crore, whatever is the amount, on that 5%. Got it? Yes, sir. And even in this case, whatever TDS has been deducted, actually it may not be the income for the pay, because it is just an account, which it is just an amount which was lying in his account, which is withdrawing now. Whatever is withdrawing, can we consider it as an income? No, no, sir. He has earned this income. He has already paid tax on it, and amount was credited in the bank account. Now he is withdrawing that money, Papa, to buy anything or to spend it. So in that case, whatever amount he is withdrawing, will we consider it as an income? No. But whatever TDS is deducted and remitted to the government, will he get a credit of it? Of course. Of course, he will get a credit of it. Okay. Then 194P. Section 194P is TDS on pension income. Easy to remember. TDS on pension as well as interest income. Okay. But this is applicable only for specified senior citizen who is earning pension income as well as interest income from the same bank. And here specified senior citizen means aged 75 or more during previous year. Normally senior citizen means 60 or more, but who is covered here is only 75 or more, guys. Now let me explain you. Listen you. Now assume a person who is aged more than 75 is having a bank account with SBI. He has kept a deposit with SBI. Okay, he is earning interest income on it. And this person who is a senior citizen is also earning pension income through SBI. SBI might not be employer. Someone else is an employer, but that employer is paying pension through what? SBI account to this individual. So in that case, if SBI is paying both interest as well as pension income for this resident senior citizen who is aged 75 or more, and if this person is not earning any other income, then whatever tax is supposed to pay has to be deducted by the bank, that is SBI in my example, as TDS, as per section 194P. And if by chance, if interest along with pension is less than basic exemption limit applicable to that senior citizen, that is either 4 lakh, 3 lakh or 5 lakh, under optional scheme it will be either 3 or 5 lakh, whereas under default regime always 4 lakh. So if pension plus interest is less than threshold limits, then no TDS. But if it is more than basic exemption limit, then the bank has to deduct TDS of how much? Whatever is the tax liability of this senior citizen has to be deducted as TDS by the bank, guys. And there is one benefit given to the senior citizen. If he is earning only interest income and the pension income from a single bank who has deducted TDS under section 194P, then this person is exempted from filing the income tax return. He need not file income tax returns, guys. Okay. Next, 194Q. Q is when you have purchased a large quantity of the goods where the payment is more than 50 lakh. Okay, so purchase of goods in large quantity, 194Q, large quantity. Okay, huge. Fine. So purchase value is more than 50 lakh in a previous year, and 50 lakh is excluding GST. Clear? That is the purchase price. Okay. So TDS has to be deducted at what percentage? 0.1% of the sum exceeding 50 lakh. So here also, similar to 194N, TDS is only on the excess part. For example, I assume I have purchased the goods from you for 60 lakh. So I am making a payment of 60 lakh plus GST. So TDS has to be deducted on 60 lakh, which is excluding GST, minus 50 lakh, which is a threshold limit. How much do we get? 10 lakh. So on 10 lakh, 0.1% TDS has to be deducted. Clear? And please be careful while checking this 50 lakh, it should be excluding GST, guys. Okay. For example, assume sale value or purchase value is 48 lakh. Okay, that is value of supply, let me take, plus GST. Assume 6 lakh. I'm just taking randomly. So total invoice price is 54 lakh. Should TDS be deducted? No. 48 lakh is less than 50 lakh, so no TDS. Okay, yes. And here, when should buyer deduct TDS is only when his business turnover in the last financial year is more than 10 crores. Both the condition has to be satisfied, guys. That is, purchase value should be more than 50 lakh in the current year, and the buyer's business turnover in the last financial year should be more than 10 crore. Only then TDS has to be deducted. If any one of this condition is violated, then no TDS. No TDS, guys. and TDS has to be deducted at the time of credit or payment, whichever is earlier. Then 194R, if any benefit or perquisite is given to any person who is not an employee. If any perquisite or benefit is given by employer to employee, it is a part of salary to employee and employer will deduct TDS under section 192 only. But there can be a possibility of giving a benefit or perquisite to someone else who is not an employee. Yes. And if the value of that benefit is more than 20,000 in a year, then TDS will be deducted at 10% before providing such benefit or perquisite. Please be careful. I'm repeating once again. If an employer is giving perquisite or benefit to an employee, then TDS will not be deducted here. TDS will be deducted as per section 192 only. Oh, the last section, which is a new section added, guys, 194T. If a partnership firm is paying interest or salary, bonus, commission to the partner on whatever amount the firm is actually paying to the partner, they have to deduct TDS at 10% if the amount paid or credited is more than 20,000 in a year at the time of credit or payment, whichever is earlier, guys. And please be careful, if a firm is making payment to a partner, we need to consider the actual amount paid, guys. Actual amount paid. Because for the firm, we need to check section 40B. Interest maximum 12% will be allowed. And for remuneration, salary, bonus and all, limit as per 40B is there, which is based on book profit. Yes. And whatever is allowed for the firm will be taxable in the hands of partner under the head PGBP. Yes. We learned this provision in detail when I was covering PGBP head. Yes, so. So, should TDS be deducted on the amount allowed as expenses for the firm or on the amount which is actually paid for by the firm? Guys, irrespective of the limit as per section 40B, whatever is the actual payment made by the partnership firm to the partner, TDS has to be deducted on that amount at 10%. That is on the actual interest paid as well as on actual remuneration paid, guys. Hope you guys remember I explained in detail when I was covering section 40B and section 28. Connecting both, I explained along with an example under the PGBP head. If you want, you can just go back to that video and watch it, guys. Okay, fine. So limit under section 40B is not relevant here for deducting TDS, and this is a new section, so please be careful, guys. Okay. And the payer has to deduct TDS only when the income is taxable in the hands of payee or receiver. If the income is exempt in the hands of payee, should payer deduct TDS? No, guys. The payer should not deduct TDS. Oh. Next, tax deducted is the income received. Section 198. As I already told you, whatever 1 lakh, as per my example, 1 lakh, whatever has been deducted. One second, I will just show you. Yes, in this example, whatever 1 lakh TDS is deducted by the payer and remitted to the government, should we consider it as an income to the payee? Yes. So payee should always consider the gross figure, that is 10 lakh, as his income. But for this 1 lakh, he will get a credit. He will get a credit. Means from the total tax liability, we can deduct 1 lakh whatever has already been paid in the form of TDS, guys. Only the remaining amount has to be paid. Yes, sir. Okay. The tax deducted at source is deemed to be the income received by the assessee for the purpose of computing his income, that is in the hands of payee. So in my example, what is the income of a payee? 10 lakh gross figure. Okay. And I also told you, if net figure is given in the question after TDS, then how to gross it up. Okay. And please be careful, especially in total income questions and all, one or the other adjustment will be there on TDS, guys. However, the following tax paid or deducted would not be deemed to be the income received by the assessee for the purpose of computing the total income. What is it? The tax paid by the employer under section 192 subsection 1A on non-monetary perquisites provided to the employees, because this is exempt in the hands of employee as per section 1010 CC, guys. 1010 CC. Whereas if tax is paid on any other component of salary by the employer, it will be taxable as perquisites in the hands of employee under the head salary. Only on non-monetary perquisite, it is exempt. Okay. And same, whatever amount the employer has paid as tax on non-monetary perquisite, the employer cannot claim it as expenses, guys. Okay. Then tax deducted under section 194N, it is not in the nature of income. So accordingly, it will not be considered as income, but he will get a credit of it. The account holder will get a credit of it. I explained it when I was covering section 194N. Okay. So payee will get a credit of whatever TDS has been deducted. That means from total tax liability, which he will calculate in assessment year, we will reduce all the TDS, TCS as well as advanced tax guys. Then once the payer has deducted the TDS and remitted to the government, he should also file quarterly TDS returns. With whom? With the department. So there are three form numbers here: 24Q, 26Q, and 27Q. What are those? We will see. 24Q has to be filed for the TDS deducted on salary payment to resident as well as non-resident employees. Whereas 26Q is for the TDS deducted on any payment made to a resident other than salary payment, because salary is covered here. Whereas 27Q is for the TDS deducted on any expenses made to a non-resident other than salary. Got it? Whereas 27EQ is TCS returns, but I have just given it here along with TDS returns, guys, so that it will be in one place. Got it? Yes. Sir, payer is supposed to do so many things: deduct TDS, then remit it to the government within 7th of next month, and also file TDS returns. What if it doesn't do it? Then, as I already explained you at the beginning, he will be treated as what? Assessee in default. The payer will be treated as assessee in default for whatever loss he has caused to the government with respect to TDS. He has to pay it now to the government along with interest. Along with interest and penalty also. And if the amount involved is more, then he will also get an imprisonment. That is free boarding and lodging, guys. Okay, chalo. Let me read it. If a person responsible for deduction of tax at source fails to deduct the appropriate tax, or after making the due deduction fails to deposit it, he shall be deemed to be an assessee in default and shall be liable for. Okay, he will be called as assessee in default plus payment of whole or any part of the tax as due. Okay, only the tax amount. That is, in my example, it was 1 lakh, not entire 10 lakh, only that 1 lakh TDS component. Okay. And where TDS is not deducted, then he should also pay TDS amount along with interest. So as per my example, what was the TDS amount, guys? 1 lakh. And interest is on 1 lakh. So we need to check whether it is at 1% or 1.5%. Depends upon the scenario. If TDS is not at all deducted by the employer, sorry, by the payer, what is the amount he was supposed to deduct? 1 lakh. So he has to pay 1 lakh along with interest on 1 lakh at 1%. Okay, so interest is at the rate of 1% per month or part of the month on the amount of tax, that is TDS amount, which is 1 lakh in my example. From the date on which such tax was deductible to the date on which such tax is actually deducted. So from the date on which it was supposed to be deducted till the date it is actually deducted. And we already learned what is the date on which it was supposed to be deducted: date of payment or date of credit or date of payment, whichever is earlier for different sections. Yes, sir. So that from that day, we need to count it till the actual date of deducting the TDS. And even a part of the month, we need to consider full month, guys. Oh. Where, second scenario, where the TDS is deducted but not remitted to the government. It is a serious consequence. And here the payer is playing around with the government money. So that is why interest is at 1.5%. Interest at the rate of 1.5% per month or part of the month on the tax from the date on which such tax was deducted to the date on which the actual TDS has been deposited to the government. So from the date on which TDS is deducted till the date it is deposited to the government, interest will be charged at 1.5% on the TDS amount, which is deducted but not remitted to the government. Got it? And I'm stressing that please be careful, guys. Interest has to be calculated on 1 lakh, that is TDS amount. Because by mistake, a student might consider it on the amount of expense, which is 10 lakh in my example. No, no, no. It is on the TDS amount. Because what is the loss of revenue to the government? That 1 lakh TDS amount, not the entire 10 lakh. Okay. And one more relief is given here to the payer. If payer is not deducted TDS, or else he has deducted but not remitted to the government. But if the payment was made to a resident, that is, if payee is a resident, who has disclosed this income in his return of income and he himself has paid the tax. In that case, assessee, that is the payer, will be relieved from the tagline called assessee in default. Assessee in default, guys. Okay, then there can be also be a penalty as high as the amount of TDS, and there can also be a rigorous imprisonment depending upon the amount involved for a specified period, guys. Got it? Yes, sir. So this is all about TDS provisions, guys. So I have tried to cover in detail each and everything. And coming to the question bank, in my question bank, question number one, just a minute. Yeah. Question number one is on TDS, guys. I have given the list of expenses or payments which we need to identify. That payment is covered under which section? Okay. TDS is at what rate? Is TDS applicable? If yes, what is the amount? We need to answer it. Clear? I have just given the list of expenses here and payments where we need to identify, and I have already given the answer. Please go through it, guys. This is for practice sake. In the exam, they will give 2 to 4 transactions, 2, 3, or 4 transactions, and ask you to explain the implication of TDS on that particular transaction. And if it is asked in descriptive type, obviously you have to explain and write, guys. And how do you write it and all? I have given it under additional questions, few questions, which are asked in past exams. Okay, I will just show you. You guys can go through this. Okay, I will not be discussing it now. But anyway, I have given the detailed solution under the additional questions, the way it has to be presented in the exam, guys. So please try to explain like this. So question can be asked like for 4 marks or 6 marks on TDS. So please try to present in the way how I have given here. Got it? Yes, sir. Yes, now we will learn the concept of tax collected at source. In short, we call it as TCS. So TCS is supposed to be collected by the seller on the sale of some specified goods or services. It is not applicable for all the goods and services, guys. Only for few selected goods or services. Okay. So if TCS is applicable, when seller is collecting the sale consideration from the buyer, in addition to the sale consideration, he should also collect the TCS at the respective rate. There are different rates of TCS, but don't worry, TCS concept is not as voluminous as TDS, guys. TCS is applicable only in few cases. We will learn that. Okay. So seller of specified goods or services should collect TCS along with the sale consideration. So buyer has to pay sale consideration plus TCS if it is applicable. To whom? To the seller. Okay. And whatever TCS the seller has collected, he has to remit it to the government within 7th of next month. And he should also file the TCS returns in form 27 EQ, which is quarter. Which is quarter. Yes, sir. Very simple concept. Then, sir, if seller is supposed to collect TCS, when should he collect TCS? Means in what scenarios? When he is selling which goods or services? We will see that. But if he is supposed to collect TCS, when should he collect it? Means on what day? Similar to TDS, for TCS also I have made one table, guys. When TCS is supposed to be collected, that is on what day? So for section 206C 1F, the TCS has to be collected at the time of receipt of payment from buyer. Means when seller is collecting the money from buyer. So for example, assume it is a cash sales. In the books of seller, whatever we are discussing is in the books of seller. Okay. He will pass the entry on what day? Sales entry, bank to sales. Assume on 20th October. So he is supposed to collect TCS on what day? 20th October. And remit it to the government on or before 7th November, guys. Okay. Sir, what if it's a credit transaction? Assume sale entry is passed on the 10th October, that is buyer to sales, till the buyer pay to the seller. Buyer is an asset in the books of accounts of the seller. Okay. And the payment actually is received on 15th November. So the entry is buyer, bank to buyer. Bank to buyer. Even in this case, the payment is made on what day? 15th November. So TCS has to be collected on 15th November and it has to be remitted to the government on or before 7th December. And this provision is applicable only for one case, that is section 206C 1F. Oh. Then coming to this sections. For section, the 3 cases which is covered in section 206C, subsection 1, subsection 1C, and subsection 1G. TCS has to be collected on the date of debit to the account of buyer in the books of accounts of the seller, or the date of receipt of payment from the buyer, whichever is earlier. Now assume I am the seller, you are the buyer. All these adjustments we are seeing in whose book? In my book as a seller. Okay. So assume it is a cash sales. So payment will be received immediately. So bank to sales. So TCS has to be collected on what day? 20th October. 20th October. Then coming to credit transaction. Assume sales is made on 10th October. That is buyer to sales. Buyer to sales. Okay. So buyer account is debited in the books of accounts of the seller on 10th October because he is still yet to pay. Till buyer pay, it is an asset in the books of accounts of the seller. Okay. Then the amount is actually received on 15th November. So the entry is bank to buyer. Bank to buyer. So whichever is earlier we need to take 10th October or 15th November, whichever is earlier, 10th October. So TCS has to be collected on or before 10th October and it has to be remitted to the government on or before 7th November. Got it? For this sections. For this sections. Yes. And what is TCS? I have already explained. I have also given two lines here. What is it? Let us go through. Tax collection at source, as the name says, means collections of tax at source at a prescribed rates by the seller or collector from the buyer of a specified goods or services. It is not applicable for all the goods and services, only selected goods and services tax. Okay. And when TCS has to be collected, I had already covered it in the table. Okay. Let us see. Sir, which are the cases in which the seller has to collect TCS one by one? Section 206C subsection 1 tells if there is a sale of alcoholic liquor for human consumption, TCS has to be collected at 1%, scrap 1%, minerals being coal or lignite or iron ore 1%. So for all this it is 1%. Whereas tendu leaves it is at 5%. Whereas here there is an amendment here. Timber or any other forest produce at 2%. Any other forest produce or timber. Okay. So if there is sale of any of these items, TCS has to be collected by the seller. From whom? From buyer at the respective rates. But TCS is applicable only if it is for further sale. Sir, what if I am purchasing any of these items for my personal consumption or to use it as a raw material in my manufacturing process? Then no TCS, guys. No TCS. For example, assume a person is purchasing alcohol for his personal consumption. Should he pay TCS? No, the seller will not charge TCS. Then when this is applicable, sir? Assume guys, manufacturer, that is Kingfisher, the manufacturer of alcohol. They're selling the alcohol to the showrooms or for the shops, liquor shops. Yes. In that case, TCS is applicable because it is for further sale. Whereas when people buy it for their personal consumption, TCS is not applicable. Got it? Yes, sir. Same way for any other product. For example, let me take timber. Assume I am buying timber to use it as a raw material in my furniture making. I am engaged in the business of making furniture. So I am purchasing timber as a raw material to use it in my manufacturing process. In that case, will TCS be applicable in that scenario? No, guys. Now, if I buy timber to further sell it to someone else, then TCS will be applicable. Okay, sir. Then section 206C subsection 1C. Actually, TCS is completely covered in only one section, that is section 206C, but under various subsections, guys. Clear? So second scenario is under subsection 1C. Seeing, hello, pay attention, pay attention. Yes. What is it we will see? Grant of lease or license of parking lot, toll plaza, mining and quarrying other than mining and quarrying of mineral oil, petroleum and natural gas. Means for this, no TCS. Okay? Yes. At what rate TCS has to be collected for this? It is at 2%. 2%. Next. Section 206C, subsection 1F. There is an amendment in this section, guys. Okay. First, what was there we will see. Later, what is amended also we will see. First, this was already there. If there is a sale of motor vehicle of value more than 10 lakh, That is ex-showroom price, not on-road price. Okay. TCS is collected at 1% from by whom? By seller. From whom? From buyer. And here TCS is applicable only in case of sale of motor vehicle in retail sales. That is, if manufacturer is selling it to a distributor or showrooms, no TCS. But if distributor or showroom is selling to the people or public at large, is TCS applicable? Yes, only if the ex-showroom price is more than 10 lakh for a vehicle. Okay, sir. Then there is an amendment part. We will see. First, only motor vehicle was there, guys. Now they have tried to include any other product also whose sale value is more than 10 lakh. Any other product means they have notified 10 products. What are those? We will see. With effect from 1st January 2025, Section 206C subsection 1F has been expanded to include every person being a seller who sell any other notified goods for exceeding 10 lakh at the time of receipt of such amount. Collect tax from the buyer at 1% of the sale consideration. And guys, please be careful, if sale value is more than 10 lakh, assume 12 lakh. On entire 12 lakh, 1% would be collected. Okay. Accordingly, central government as wide notification has notified the following goods of the value exceeding 10 lakh for the collection of tax at source. So if a seller is selling any of these goods whose sale value is more than 10 lakh, then he has to collect TCS at what rate, sir? At 1%. So which are those goods which are newly notified? Let us see. Any wristwatch, any art piece such as antiques, painting or sculptures, any collectibles such as coin or stamp, any ashed rowing boat or canoe or helicopter, any pair of sunglasses, any bag such as handbag or purse, any pair of shoes, any sportswear and equipment such as golf kit, skywear, or any home theater system, any horse for horse racing in race clubs, and horse for polo. Guys, polo is like a game, you know, hockey, which normally people play on ground with a stick in their hands. Whereas polo means the player will actually sit on the horse with a stick in his hand to play. Got it? And please be careful here, if horse is purchased only for race club or for polo, TCS is applicable. Sir, I am taking care of horse or I am a horse breeder. I have purchased the horse for more than 10 lakh. Is TCS applicable? No. And don't worry, this is applicable only for some stars. Okay. Whereas we people, if we are buying this, then will it be more than 10 lakh? May not be, sir. Especially like bag, sunglasses and all. But anyway, if by chance, assume tomorrow you qualified and you are earning really well, and if you are buying any of this product whose cost is more than 10 lakh, should seller collect TCS? Yes, he has to collect TCS. And I know, guys, see, I cannot assure you that how much you will be earning once you get qualified. But whatever is required to lead a decent life and whatever is required to fulfill your dreams, definitely you will be earning much more than that. So I can assure you that. So please make sure, and you will have a lot of independence. Okay, you can choose whichever field you want. You can go for an employment, or you can work yourself. You can start your own practice, or you can be a teacher like us. So you guys can be doing anything and in any field. You can choose audit field, you can choose accounts, you can choose tax, or any multiple areas are there. You can choose even FEMA or international taxation as your profession, guys. Okay, but as of now, just focus on your studies and make sure you complete it. I know you have started this course with a lot of dreams and you have to achieve it, guys. No matter what, you have to do it. Yes. Chalo, let us proceed further. Section 206C subsection 1G. Section 206C subsection 1G provides collection of tax by every person in two scenarios. First one, being an authorized dealer who receives amount under a liberalized remittance scheme, in short we call it as LRS, of an RBI for remittance from a buyer, being a person remitting such amount. Okay, means remitting the amount outside India as per LRS scheme of RBI. Then second one is being a seller of an overseas tour program package who receives any amount from the buyer who purchases the package. So I am going for a foreign trip where I am approaching any authorized dealer to purchase the overseas tour package, guys. Okay. Yes. So both these transactions are covered. Let us see what is the TCS applicable. There are few amendments here also, guys. So please be attentive. First, if the amount is for the purchase of overseas tour program package, then TCS has to be collected at 5% till 10 lakhs, and over and about 10 lakhs, it is 20%. Over and above 10 lakh, it is 20%. But if a person is purchasing overseas tour package for more than once in a year, then he has to intimate the details about his previous purchase when he's going for second or more time, guys. Because here the aggregate limit is 10 lakh per year, on which TCS will be 5 lakh, and in excess of 10 lakh, it is 20%. So I will try to explain that with an example, illustration. You can just come to my question bank. I have given few illustrations. Yes. So few illustrations on TCS, guys. So if you ask me page number 208, 208. Quickly, I will go through this. Yeah. So let us see where the amount is for the purchase of overseas tour program package. So Assassi is purchasing two packages. One is on 10th July for 4 lakhs. So what is the TCS on this? 5%. And he is purchasing one more tour package in the same year for 5 lakhs on 10th November. So will TCS be applicable on this also? Yes, 5 lakh at 5%. TCS will be collected by the seller of overseas tour package. Okay, sir. Next. Assume the assessee purchased the first tour package on 10th July for 8 lakhs. So on 8 lakh, 5% TCS would be collected, and he is purchasing one more package that is on 10th November 2025, that is for 6 lakh. Now please check. What is the aggregate amount? 8 plus 6. It is more than 10 lakh. Yes. So 8 plus 6 comes to 14 lakhs. So out of this 6 lakh, on 2 lakh TCS would be collected at 5%, and on remaining 4 lakhs, it is 20%. Sir, why only 2 lakh 5%? Guys, already 8 lakh is covered here at 5%. So how much is short of 10 lakh? 2 lakh. So on 2 lakh, 5%, on remaining 4 lakh, when he purchased the second package, on 4 lakh, it would be 20%, and on 2 lakh, 5%. Hope you got it. So while checking the 10 lakh on which TCS would be collected at 5%, it should always be aggregate per year. Then one more example. Assume first package he purchased on 10th July for 12 lakhs, on which TCS has to be collected like this. Up to 10 lakh, it is 5%. On remaining 2 lakhs, it is 20%. So entire 10 lakh is over a year only. If he purchase one more package in this year, then straight away 20%. Assume he purchased one more package for 3 lakhs on 10th November. So on entire 3 lakhs, it will be 20%. So in simple, if I have to tell, so whatever 10 lakh is there, it is not per package. It is per year. So if an assessee purchase number of foreign tour package in a year, then in aggregate up to 10 lakh on FIFO basis, 5%. On the excess amount, it will be 20%. And it is the duty of the assessee to inform about his earlier purchase of foreign tour package, guys, when he is going for second or more package. Then second, third, and fourth is with respect to remitting the money outside India. If the amount remitted is out of education loan obtained from any financial institution as defined in section 80E, then no TCS on it, guys. Amendment. On this, previously TCS was there, but now no TCS. Okay, means I have taken education loan in India and I am remitting it outside India. In that case, no TCS on it. Okay, then second part I will cover now. Okay, all this 2, 3, and 4 is with respect to remittance, but I covered third one first because there is no TCS on it. Next, second one. Amount remitted is for the purpose of education or medical treatment outside India. And here education is covered, but not education loan. Means I am remitting my own money, sir, or my parents' money, sir. I have not taken any loan. Okay. So if amount remitted outside India is for an education or medical treatment purpose, then 5% is the TCS to be collected in excess of 10 lakh, which is an amendment. Please be careful. Previously, this limit was 7 lakh, but now it is 10 lakh. Okay. Up to 10 lakh, no TCS. In excess of 10 lakh, it is 5%. Okay. And for any other purpose, means other than this two. If the amount remitted outside India is for any purpose other than covered in 2 and 3, then TCS is at 20% on the amount in excess of 10 lakh. Up to 10 lakh, no TCS. In excess of 10 lakh, whatever is the amount on that 20%. On that 20%. Hope you understood. Yes, sir. But the provision of this subsection will not be applicable if buyer is supposed to deduct TDS under any of the sections which we already covered under TDS, guys. So if buyer is supposed to deduct TDS, then for seller, TCS will not be applicable. Okay. And TCS under section 206C 1G will not be applicable in the following case. If the buyer is a non-resident as per section 6 who doesn't have any permanent establishment in India, means he doesn't have any office or branch in India, then irrespective of the amount, no TCS, guys. And please be careful, for a buyer exception is given here. So obviously if a buyer is covered here, seller should not collect TCS. Got it? Yes. And one more important thing to take care, guys, for second, third, and fourth, all three put together, the aggregate limit is up to 10 lakh. Up to 10 lakh, no here anyway, no TCS. Okay, let me take 2 and 4. For 2 and 4, aggregate limit is up to 10 lakh. If it is more than 10 lakh, then TCS has to be collected. TCS has to be collected. I will explain this also with few illustrations, which is there in the question bank. Come to this. Yeah, and easy to remember section 206C 1G, guys. You are going outside India. So that is why you are purchasing the foreign tour package or you are remitting the money outside India. So G, 1G, you are going outside India. Try to remember like that. Even 1F, 1F talks about sale of motor vehicle as well as now even other goods have been notified. But try to remember it like Fortuner car. Fortuner car. So if the value is more than 10 lakh, then TCS has to be collected at 1%. I am talking about subsection 1F. Oh, let me come back to this. Now assume, guys, the amount remitted. There are two different scenarios. Amount remitted outside India is for education or medical treatment purpose. First 8 lakh is remitted on 15th September, no TCS. And another 8 lakh is remitted on 5th February 2026. TCS will be on 6 lakh because aggregate you can check is 16 lakh. How much is in excess of 10 lakh? 6 lakh. So on 6 lakh, 5%. When? On 5th February. That is at the time of second remittance. Okay, first case done. Second case, where the amount is remitted for any other purpose, not for education, not for medical. In that case, first 8 lakh is remitted on 15th September, no TCS. Then another 6 lakh is remitted on 5th February. Aggregate you check. Aggregate is 14 lakh. In excess of 10 lakh, how much is there? 4 lakh. And when it is crossed on 5th February. So on 5th February, on 4 lakh, TCS at 20% has to be collected, guys. Okay, sir. So this was two different cases. Now, same person is remitting money outside India for both the purpose. Both the purpose. And in that case, we need to follow FIFO. Okay, date of seek. We need to follow the date order sequence. Okay. First, what is done? We will see this one. 8 lakh is remitted outside India on 15th September 2025 for education or medical purpose. And education means not an education loan. Okay, yes, 8 lakh. On this no TCS because it is within 10 lakh. And the same person remitted 5 lakh outside India on 5th February 2026 for any purpose other than education and medical. On this, is TCS applicable? Yes, check the total. 8 plus 5 comes to 13. How much is in excess of 10? 3 lakh. So on 3 lakh, how much percentage? 20, not 5. Because now second time is remitting the money for any purpose other than medical and education. For any purpose other than medical and education. So it is at 20%. It is at 20%. And please be careful. If by chance, if the purpose is not given in the question, they have just mentioned that an assessee is remitting the money outside India. In that case, please go with 20% in excess of 10 lakh. Okay. Yes. Next. I just tried to swap the dates and purpose, guys. Okay. Now assume first 5 lakh is remitted outside India on 15th September 2025 for any purpose other than medical and education. No TCS on it because it is within 10 lakh. Oh. Then again the same person remitted 8 lakh outside India on 5th February 2026 for education or medical purpose. Then will TCS be applicable? Yes, assuming it is not an education loan. Okay. So how much is the aggregate you check? 8 plus 5, 13 lakhs. So how much is in excess of 10 lakhs when he remitted this? 3 lakh in aggregate. Okay. So in aggregate, it is coming to 13 lakh, guys. 13 lakh. So how much is in excess of 10 lakh? 3 lakh. So on 3 lakh, it is 5% amount. Because when he's remitting second time, it is for education or medical purpose. So in excess of 10 lakh, it will be at 5% on 5th February 2026, guys. Hope you guys got clarity. So if the ICI wants to make the question little challenging on TCS, they may test all this, guys, especially on aggregate limit. So please be careful with it. I repeat, for this to both put together, the aggregate limit per financial year is 10 lakh, guys. And more than 10 lakh, it will be either 5% or 20%, depending upon the purpose for which you are remitting outside India. Got it? Yes, sir. So these are the cases of TCS, guys. Now, whenever seller is supposed to collect TCS from the buyer has to give his PAN to the seller. If buyer fails to give his PAN to the to the seller, I repeat, if buyer fails to give his PAN to the seller, then seller has to collect TCS as per section 206 CC, which is twice the actual rate of TCS or 5%, whichever is higher. But maximum is 20%, because in few cases TCS rate itself is 20%. So if you take 20% into 2, you will get 40. 40% or 5%, whichever is higher, 40%. No, maximum is 20%. Even if buyer has not given his PAN to the seller, maximum TCS which the seller can collect is 20%. Now let us assume actual TCS rate applicable is 1%, but buyer has not given his PAN. So in that case, into 2% or 5%, whichever is higher, 5%. So seller has to collect TCS at 5% from the buyer and remit it to the government, and whatever is remitted, buyer will get a credit for it. Buyer will get a credit for it. But it might affect his working capital. And these provisions are not applicable to a non-resident who doesn't have any permanent establishment in India. So if a buyer is a non-resident who doesn't have any permanent establishment in India, then section 206 CC will not be applicable, guys, because non-residents will not have PAN or might not have PAN. Okay. Similar provision is applicable even for TDS under section 206 AA. What is it? We will see. If payee doesn't provide his PAN to the payer, then TDS has to be deducted at 20% or actual rate of TDS as per the respective section, whichever is higher. Actual rate of TDS or 20%, whichever is higher. Who should deduct? The payer. When? If payee doesn't give his PAN. But for section 194Q, that is when the purchase value is more than 50 lakh, if the seller doesn't give his PAN to the buyer has to deduct TDS at 5% and not at 20%. Only for this section, we have an exception. Okay. Now, this provision, that is section 206 AA, is not applicable if the payment is made to a non-corporate, non-residents or foreign company who is a payee, because they may not have PAN, guys. So we cannot ask them to give PAN. Got it? Yes. So we are done with the TCS concept as well as TDS. So as I mentioned for TDS, guys, even for TCS, I have given one question in my question bank. Okay, where I have given the list of transactions. So we need to identify which is the section applicable, what is the rate of TCS, and if TCS is applicable, what is the amount. I have already given the solution. Just go through this, guys. Just go through this so that once you have studied the provision, you should also know how to apply it in the questions or the transactions. Yes, for TDS, I have given the list of expenses or the payments in question number 1, whereas for TCS in question number 2, guys. So please go through both of them. Yes, students, now we will revise the last topic in this chapter, that is advance tax. In advance tax of tax, the assessee has to pay in a financial year itself, that is in the previous year itself, the tax on the estimated income, which is to be assessed in the subsequent assessment year. That is, the actual calculation will be done in the assessment year. But in the previous year itself, the assessee has to calculate the estimated total income on that, what is the estimated tax liability, and if that amount after reducing TDS and TCS, if it is 10,000 or more, is liable to pay advance tax during the previous year in 4 installments quarterly, guys. It is a kind of mandatory payment of tax assessed by the assessee himself on an income before completion of financial year, that is before completion of the previous year, and it is based on the doctrine that pay as you earn. And when a person is supposed to pay advance tax, is it always? No. It is obligatory for an assessee to pay advance tax where the advance tax payable is 10,000 or more. That means if it is less than 10,000, there is no liability to pay advance tax, guys. Then there is an exemption given for a senior citizens, exemption from payment of advance tax to a resident individual not having any income under the head of PGBP and their age is 60 years or more. So if both these conditions are satisfied, even though their tax liability is 10,000 or more, still they need not pay advance tax. But they have to pay it as self-assessment tax before filing their income tax returns, guys. Okay. Let me just try to explain this concept with an illustration, guys. I have given this illustration in the question bank in page number 207. You can refer to it. Now, during the previous year itself, the assessee has to make an estimation. So, based on his estimation, he should calculate what can be his total income till the end of the year. And obviously, it may not be accurate, guys. It is just an estimation. Okay. And on that estimated total income, apply whatever is the tax rate applicable to the assessee. It is as usual. Whatever tax rates we already discussed in the tax rates chapter, guys. Same rate will be applicable. Okay. So if at all if assessee has any special income and all, first calculate tax on special income, then tax on normal income and add up both. Clear? Yes. And the rate and all will remain same. But as it is an estimated figure, we call it as estimated total tax liability. And from that, you deduct or reduce estimated TDS or TCS, which the assessee is expecting that someone will deduct or collect it from him and remit it to the government. Okay, all these are estimated figures, guys. Okay. So remaining figure is what? Advance tax payable. Is it more than 10,000? Yes. So is he liable to pay advance tax? Yes. So this 2,80,000 has to be paid by the assessee as advance tax in 4 installment during the previous year quarterly. Sir, how much in each installment? We will see now. So totally he has to pay 2,80,000 as per this example. Sir, in each installment, how much should he pay? We will see now. Oh. So due dates for payment of advance tax for each installment is given, guys. So the due date is very simple. 15th of the last month of each quarter, guys. 15th of the last month of each quarter. Okay. First payment has to be made on or before 15th June of the previous year. Up to 15% of the advance tax due has to be paid. Advance tax due is nothing but whatever we discussed here. It is nothing but 280. 2,80,000. Okay. Then on or before 15th September of the previous year, 45% of the advance tax due minus whatever is paid in the first installment. Means this is the cumulative percentage. Okay. Yes, up to 45% cumulatively has to be paid by second installment. Then on or before 15th December, up to 75% of the advance tax due minus amount paid in earlier installment. Means 75% of 2,80,000 you take minus whatever is already paid in the first 2 installments. Okay. Then on or before 15th March of the previous year, up to 100% of the advance tax due minus whatever is paid in the first 3 installments. So that means by 15th March, you should have paid 100% of the advance tax due. Even though the due date of pay for paying the last installment is 15th March of the previous year, they have also mentioned in the law that anything paid on or before 31st March of the previous year will be considered as advance tax. Advance tax. Sir, and why are we calling it as advance tax? Guys, at the beginning of the chapter, I told you, as per section 4, which is a general charging section, it is clearly told income earned by a person, that is the total income earned by a person during the previous year, is chargeable to tax in the assessment year. But now they are asking it, as per this concept, to pay tax in the previous year itself. So that is why they are calling it as advance tax. So assessee is paying tax in advance tax quarterly. Got it? But even for advance tax, you will get a credit. I explained you, at the beginning of this chapter, I explained you. For whatever amount the government has collected directly or indirectly from the assessee during the previous year in the name of TDS, TCS and advance tax, the assessee will get a credit for this in the assessment year. When he has done the actual total tax liability calculation, from that TDS, TCS as well as advance tax would be deducted. Remaining, if any, will be paid as self-assessment tax before filing the returns. Okay, fine. And please be careful, guys. This is a cumulative percentage. Students might get confused with this. Guys, this is a cumulative percentage. That is up to 45, 75 and 100 is given here. Means if by chance, if any amount is paid short in the previous installments, at least now make it good. At least now make it good. Okay. I'll just try to explain with an example or question. Okay, so this is a question in the question bank along with solution I have given. Guys, all the questions I will not be able to discuss because it will take too much time. It's already like almost 2 hours, and still I have to discuss a few more concepts of advanced tax like interest and all. But I have given all the solutions in my question bank in detail. So please go through it once you watch this video. Not now only, once you go through the, once you watch this video, you can go through the questions. Okay. First, completely understand the provisions. Okay, fine. As per this question, guys, the advance tax liability of an assessee is 5,31,240. You just observe. How much has to be paid in first installment? 15% of this. So 79,686 paid fully. Installment amount was also full. Whereas in the second installment, on or before 15th September, how much has to be paid? 45% of 5,31,240. Okay, which comes to 2,39,058. Should assessee pay it fully? No, no. This minus whatever is paid in the previous installment, which comes to 1,59,372. He has to pay it. Same way, third installment is up to 75%. 75% of 5,31,240 comes to 3,98,430 minus whatever he has already paid in the first two installments, deducted. So the total of this actually comes to 2,39,58. So reduce it. Remaining you pay as an installment amount. Same way, third installment, 100% of advance tax liability. So 5,31,240 minus whatever is already paid in the first three installments. Remaining you pay. In total, it should be equal to 5,31,240, guys. Got it? If you want, you can just pause the video and observe the figures. And you can also cross check in your calculator whether whatever I have done here is correct or not. Okay. Now coming back to the revision part. Guys, this is for an assessee who is supposed to pay advance tax. He has to pay it in 4 installments. And what is the due date for each installment? We saw it. But what if an assessee is following a presumptive scheme under section 44 AD and ADA? Even they have to pay advance tax if their advance tax liability is 10,000 or more. But they have to pay it in one installment. On or before what date, sir? 15th March of the previous year. So 100% of their advance tax liability, they have to pay it on or before 15th March of the previous year. Even in this case, if they pay any amount on or before 31st March of the previous year, we will consider it as advance tax. Okay, so please be careful. Only for the assessor who is covered under section 44 AD and ADA, they can pay advance tax in one installments. For anyone else, they have to pay it in 4 installments quarterly, including the assessor who is following the presumptive scheme under section 44 AE. For them, 4 installment is applicable. That is for the assessor who is engaged in goods carriage business, guys. AE 44 AE. Okay, they are covered here. Sir, what if the associate doesn't pay the tax or doesn't pay advance tax, or he paid but he short paid? Then interest will be levied on the short payment, guys. So what is it? I will explain. But before that, I have just given one case here. Let us focus on that. Assume, guys, the actual calculation during the assessment year. See, whatever we discussed here was with respect to, just a minute. Whatever we discussed here is with respect to the estimation, with respect to the estimation. But in the assessment year, we need to do the actual calculation. Yes. So I have given one example here. Okay. So the total income and actual calculation will always be done in the assessment year, guys, because the actual figure will not be known when you are in a previous year till the end of the previous year, guys. Actual figures you will get to know only on or after 31st March, guys, of the previous year. Okay. So assume the total income of an assessee under the default regime is 35 lakh. So we applied the tax rates as per the default scheme and we have calculated the total tax liability is coming to 6,55,200. Okay. TDS deducted under various section is 1,50,000. TCS collected is 50,000 and he is eligible for some relief under section 89, 5,200, and he doesn't have any AMT credit under section 115 JD. What is AMT? We will discuss later, guys. Alternate minimum tax. So advance tax payable by him is 4,50,000. This is actual advance tax which you were supposed to pay. 4,50,000. Okay. We also call this as assessed tax. Assessed tax or tax on returned income. Tax due on returned income or actual advance tax payable or assessed tax, everything is one and the same tax. So if assessee has paid less than this, Then on the difference, he has to pay interest. So let us understand how much interest. As per section 234B, interest under section 234B is attracted for non-payment of advance tax or payment of advance tax of an amount less than 90% of assessed tax. What is assessed tax? We already seen here. Okay, yes. The interest liability will be 1% per month or part of the month starting from 1st April of the assessment year till the actual date of determination of income as per section 143 subsection 1. And the interest will be on the difference between the assessed tax and actual advance tax paid. For example, assume guys, I have paid only advance tax of 3 lakh. What is the difference? 1.5 lakh. I was supposed to pay 4.5 lakh, but I have paid only 3 lakh. So what is the difference? 1.5 lakh. So on that 1% interest would be charged from 1st April of assessment year. Is that clear? Yes. And this example I have given only to make you understand what is assessed tax or what is the tax due on returned income, because they are using this term, guys. Clear? So I just wanted to explain this. Please be careful. This is the actual calculation which we do in the assessment year. Got it? Yes. So I will just try to explain the concept of 234B with an illustration, guys. I have given this in the question bank. Okay. So now see, in the assessment year, in the previous year, we did all this calculation based on estimation. So as per that, the advance tax payable was 2 lakh 80. Assume I have paid it fully. In 4 installments, I have paid it. But I did an actual calculation in the assessment year where the total income was 25 lakh and the total tax liability on that is 5 lakh 50,000. Okay, I've just taken a random figure here. You need not worry about tax rates and all. But to calculate this tax liability, we need to follow whatever is the tax rates we have discussed in tax rates chapter, guys, depending upon the scheme followed by the assessee. Okay. So this is the total actual tax liability of an assessee. From that, what is the total TDS deducted? Let us assume it to be 150. Total TCS collected under various section is 30,000. And assessee is not eligible for any relief or credit. So advance tax which he was supposed to pay was 3 lakh 70. And please be careful. Here I have not taken any relief or AMT credit and all. Okay. So he was supposed to pay an assessed tax or advance tax of 370. But based on the estimation, he has paid only how much? 2 lakh 80. Wrong estimation, underestimation. So there is a shortfall of how much, guys? 90,000. So compare this two figure. Advance tax paid is 280, whereas payable was 370. Divide 280 divide 280 by 370, guys, into 100. It is less than 90%. It is less than 90%. So on whatever shortfall is there, interest would be levied at 1% for how many months? For how many months? So interest under section 234B will start from 1st April of the assessment year till when? Till the actual calculation. And I have given here, actual calculation is done, assume on 20th July. So we need to calculate interest for April, May, June and July, 4 months. 4 months. Even part of the month has to be taken as full month, guys. Yeah, sir, what if it is in August, September and all? Accordingly, the months will increase, guys. Okay, yes. So the interest under section 234B will come to 3,600. Now the assessee has to pay 90,000 along with interest of 3,600 before filing the income tax returns. Okay. And you can also check this in another way. Guys, if the shortfall is up to 10%, they're okay to accept it. If the shortfall is more than 10%, they're telling on the entire shortfall, pay the interest. So you can check this in another way also. Divide 90,000 by 3,70,000. If it is more than 10%, then on the entire shortfall, interest would be charged. Is that clear? So if you are going by this, then 90%. Okay. If you are going by this, then 10%. Either way, vice versa. Okay. Yes. One more example. Okay. Now let us ignore this part. I have paid an advance tax of 2,80,000 based on the estimation which I did in previous year. Okay. So in the assessment year, I did an actual calculation on 20th July 2026, where my total income figure is 22 lakh. So total tax liability on that is 4 lakh 80. So TDS actually deducted under various section is 150 and TCS is 30,000. So advance tax payable is how much, people? 3 lakh. Actual advance tax, that is assessed tax, which an assessee was supposed to pay. But actually advance tax, how much he has paid? Only 2 lakh 80. Only 2 lakh 80. So what is the shortfall? 20,000. Shortfall is 20,000. Check. whether it is within 10%. So 20,000 divided by 3 lakh, it is within 10%, guys. So the shortfall is less than 10%. So no interest on it. Even though there is a shortfall, no interest on it. But assessee has to pay 20,000, but without any interest. Or else let us check 90%. Divide 2 lakh 90 by 3 lakh. Is it more than 90%? Yes. So if it is more than 90%, but within 100%, even though there is a shortfall, it is within 10%. So let us not charge interest. So there is no interest, guys, under section 234B. Clear? Means if there is a small difference up to 10%, they are okay to accept it. But if the shortfall is more than 10%, means they're asking you to pay interest on the entire shortfall. Got it? Yes, sir. And please be very careful, guys. Section 234B will start with only from 1st April of the assessment year. So on the total shortfall, we need to calculate interest at 1% per month or part of the month. Got it? Yes, sir. That is under section 234B. Sir, what if there is a short payment of tax in the installments? Then section 234C will levy the interest. What is it? We will see. So as per section 234C, for an assessee who is not following presumptive scheme under section 44 AD or ADA, other than whoever is following 44 ADA and ADA, for them there is a separate provision, okay, which is given here. Okay. So they have to pay first installment on or before 15th June. How much? 15% of tax due on returned income. Tax due on returned income means what, guys? This one. In the third note I have given. Tax due on returned income, which is also called as assessed tax, means the tax calculated on the total income declared in the return furnished by the assessee. That means actual calculations, guys, because actual calculation only you will disclose in the returns. Less means the following you will deduct: TDS, any or TCS, then any relief of tax under section 89, then any tax credit allowed to be set off in accordance with the provisions of section 115 JD. It is nothing but whatever we discussed here, guys. Along with an example I have given. Yeah, here they use the word assessed tax. They use the word assessed tax, guys. Okay, whereas in section 234C, they are using the word tax due on returned income. Both means same. Means what is the actual amount of advance tax which was supposed to be paid by the assessee. Okay. So on or before 15th June, 15% of the tax due on the return income minus what is the actual amount paid. What is the actual amount paid? So interest would be levied at 1% for 3 months, which comes to 3% on shortfall. Clear? Sir, why only 3 months? It is a time gap between first installment and second installment, guys. So they are expecting that at least you will pay in next installment. So second installment is on or before 15 September, 45% of the tax due on returned income has to be paid. Okay, so this is like payable minus what is paid, you reduce. If there is any shortfall, then interest on that at 1% for 3 months. Okay, interest is at 1% per month or part of the month, guys. So for 3 months, 1% comes to 3%. Okay. So again, here also why 3% means the time gap between 15th September and 15th December. Oh. Then the third installment was supposed to be paid on or before 15th December, which is 75% of tax due on return income. This was payable minus what is actually paid. So the difference or shortfall on that interest for 3 months at 1% each. So that means 3%. Why again 3%, sir? Time gap between 15th December to 15th March. Then the last installment was supposed to be paid on or before 15th March. Yes, up to 100% of the tax due on returned income, that is payable, minus what is actually paid up to that date in cumulative, in aggregate. Yes. And if there is any shortfall, interest would be levied at 1% for 1 month. Why, sir? It is only a time gap between 15th March to 31st March, guys. Because from 1st April of assessment year, section 234B will take over to calculate interest. Clear? So under section 234C, interest would be levied for a short payment in the installment amount only till 31st March. For the first 3 installment, it is for 3 months each at 1% for each month. So it will be 3% in each installment on shortfall. Whereas for the last installment, it is only 1% because it is for 1 month. Got it? Yes. And in the first and second installment, what you are supposed to pay is 15% and 45%. But if you are paid in the first installment more than 12%, but up to 15%, there will be a shortfall, small amount of shortfall, but on that interest will not be limited. Same way, in the second installment, you are supposed to pay up to 45% of the tax due on returned income. But if you are paid more than 36%, but up to 45%, means there is a small amount of shortfall, then no interest on it. Guys, they are not changing this percentage. Percentage is 15 and 45 only, but only for interest under section 234C they are telling. In the first and second installment, if there is any small shortfall, means in the first installment you have paid more than 12% of the advance tax due, but you are paid less than 15%. There is a shortfall which you need to pay later, but for this, no interest is limited. Same way in the second installment, you are supposed to pay 45%, but if you are paid more than 36% up to 45%, in between that, then no interest for shortfall, guys. And this benefit is given only for the first two installments because standing at the beginning of the year, that is in first or second installment, the assessee might not be able to estimate it accurately, guys. So there can be a chances of underestimation. So only for the first two installments, they are given that benefit, which I have mentioned in note you can see. However, if the advance tax paid by the assessee on the current income on or before 15th June or 15th September is not less than 12% or 36% of the tax due on the returned income, that is only for the first two installments, then the assessee shall not be liable to pay any interest on the amount of shortfall on those dates. But he should make sure that that amount is paid in the at least upcoming installments. Okay. Then if there is any underestimation of income by an assessee in the previous year due to the following incomes, that is capital gains, casual income, income accrues or arises for the first time under the head PGBP because we have started a new business or profession, or deemed dividend under section 222 except 222E, that is a loan or advance. For this, it is not given exception here. Okay. So if there is any underestimation of the income by an assessee in the previous year due to any of these incomes, and he might not know this incomes exactly before he earns it. So assume in the first installment or second installment he paid an advance tax without considering this. And if there is any shortfall due to this, will interest be levied under section 234C? No. But by the time you pay next installment, after earning this income, by the time you pay next installment, you should have considered even this income and accordingly pay advance tax. Got it? For example, assume the assessee has earned any of this income in the third installment. He might not have an idea about this when he is paying the first and second installment. So, if there is any short payment in the first and second installment due to underestimation of any of this income, interest will not be levied. But once he has earned this income, assume in the third quarter, before he pay third and fourth installment, he should consider this and pay the tax accordingly. In such case, the advance tax liability would have increased in third and fourth installment, guys. So that is why actually they have considered up to in second, third and fourth installment. So when you are paying third and fourth installment, the tax liability would have gone up accordingly. Consider 75% of that and pay it. Okay. Pay it in the sense 75% of the new tax liability after considering the following incomes minus whatever is already paid in the first two installments, guys. Got it? Yes, sir. Then third note we already discussed. Yes. Now, sir, what if assessee is following a presumptive scheme under section 44 AD or ADA? In that case, they are supposed to pay only one installment, right? Yes. So we cannot charge interest from the beginning of the year. So they are supposed to pay 100% of their advance tax liability on or before 15th March of the previous year. And if they don't pay, or if there is a short payment, interest will be levied at 1% per month, only for 1 month. That is from 15th March to 31st March. Whereas from 1st April, anyway, section 234B will take over. Interest calculation will be happening as per section 234B. So this is only for the assessee who is following presumptive scheme under section 44 AD and ADA. Whereas for all others, it is as per this calculations, guys. Clear? So this is the interest calculation as per section 234C if there is a short payment of advance tax in the installments in the previous year. Whereas on the total short payment, interest would be levied as per section 234B from starting from 1st April of the assessment year at 1% per month or part of the month. And please be careful, this calculation is same for all the assessee, including the assessee who is following the presumptive scheme under section 44AD as well as ADA. Got it, guys? Yes. So this is all about the provisions of TDS, TCS, and advance tax. Guys, I know by now you would have already been tired. Yes, I agree. But please try to push yourself. And I know, see, many a times as a student, when you're studying, you will feel like, sir, can I remember all this? You taught so many things in this video. TDS, TCS, so many percentage, rates, threshold limits, and even advance tax over and above that. How can I remember all that? Guys, I know when you study for the first time or second time, you will have that doubt, but make sure that each and every topic you are studying again and again till you get a hold on it. You might not get it, you may not get it at the first instance or second instance, but you need to do it again and again, guys. You cannot give it up. You cannot think that, oh, this topic is tough, so let me leave it. Please don't do that. If you think it is tough, it will remain as tough forever, guys. So please try to change your mindset and put more and more efforts. If you feel that any topic is little challenging or it is voluminous, it is tough to remember, maybe try to do it again and again, guys. If required, watch this video again. Okay, just relax. See, you can just relax and watch the video, no? So you need not put so much of efforts like what I am doing. So please make sure that if you feel somewhere that, sir, this concept is still not sure for me, please watch it again. Or maybe practice questions on that. Or study once again from your end so that you'll be 100% thorough with that concept, guys. So I request you, please don't leave any concept, don't skip any topic. Make sure that you are covering 100% of the syllabus, however easier or tougher it is, guys. Do well.